All right, welcome back to Robinhood Stock Market Watch List. This is our live meeting. My name is Carlos. Today is Sunday, the 15th of January 2023. And so this is our amazing weekend stock market meeting that we do every Sunday. And so we're going to go over what's going to happen before it happens, starting with economic reports. Economic reports always have the biggest impact on the United States stock market. So the best place that I've been able to utilize this information is on a mobile application and a website called investing.com. If you don't use investing.com, I highly recommend that you start, because it really provides us a highly valuable amount of information, as well as alerts and news information. And so, but for now, we're going to go over to the economic calendar. And so there are a few things we got to configure, like always, because otherwise it's just going to show too much information. And so what we want to do is we want to clear everything, because there's only two things that we need to see for this. Is we got to put a check mark under the United States. And then we want to put under importance, you'll see a 1 star, 2 stars, and a 3 stars. We want to put a check mark under 3 stars, because what we're telling this system is that we want to pull everything that has the biggest impact on the United States stock market system. So we'll click apply, it refreshes, and then we want to click on for this week. And now, boom, here it is. Every single economic report that'll have a major impact on the United States stock market. So this is great information. That way we always are aware of what's going to happen before it happens, but we're going to decipher more into this. So starting with Monday is a holiday, so obviously there's no market that will be open, but the US futures will most likely start sometime around that in the middle of the day. So that's a good time for us to kind of start monitoring that way we can kind of see what the market's thinking. But going into Wednesday, we have the core retail sales for the month of December, and then we have the PPI report, and then just the regular retail sales. Now, if you're not sure what these are, be sure to click on them. Now, a lot of these are pretty repetitive, because we'll have weekly reports, we'll have monthly reports, quarterly reports, and then we'll have our yearly reports. Now, the more rare that these reports are, the more of an impact, the more volatility it's going to have to the stock market. Now, again, if you're not sure what these reports are, be sure to click on it. That way you'll see a paragraph telling you exactly what it is, and then the paragraph below that tells us how it will affect the stock market. For example, the core retail sales measures the change in the total value of sales at the retail level in the United States, excluding automobiles, because that's the other report. It is an important indicator of the consumer spending, and is also considered as a pace indicator for the United States economy. A higher than expected reading should be taken as a positive or bullish for the US dollar or the stock market, while a lower than expected reading should be taken as a negative or bearish for the US dollar or the stock market. And so not only once you kind of get an idea of what these reports are, we want to know exactly what time they're going to be reported, because that way we know, is it going to affect pre-market, or is it going to affect after the market opens? That way we can plan our strategies accordingly. Now, when we're looking at this on the website, it's automatically going to default it to the Eastern time. But if you're looking at it on your mobile device, it's going to automatically default it to your time zone. So it's extremely important that you are aware of what time these reports are going to come out, so that way you can take advantage of the situation. So for example, these reports, all three of them, are scheduled to be reported on Wednesday, January 18th at 8:30 in the morning Eastern time. That means that this is going to be have a major impact on the stock market during pre-market, 1 hour before the stock market opens, and that'll continue over throughout opening. Now, we all know that the first hour and the last hour of the day are the most volatile times. And so, the most volatile time is easily going to be early in the morning. But there's another thing that we can always look into to see what the evenings are scheduled with, other than financial earnings. But it's also important that we always utilize another website called factba.se, or you just type into Google Joe Biden's schedule, and it should take you to this website where we'll see the president's schedule for the next day. Unfortunately, we don't see like a week out, because when it comes to the president's schedule in the White House, those schedules are kind of created on a daily basis. So if they're created on a daily basis, we have to be aware of what is scheduled to happen the next day. And so usually if Biden is scheduled to speak, or the White House, it's usually during power hour, or maybe an hour or a couple hours before the market closes. And that can provide a massive amount of volatility with the stock market during those times. Now, a lot of times, if it shows Biden is going to talk, it may say what he's going to talk about. And if it has to do with like the economy, like we're here, the president delivers a remark on the economy and our efforts to tackle inflation. And so this is, it says it was early in the morning. Normally he's not a morning person. It's usually, again, an hour, a couple hours before the market closes. And so, like I said, this is very, very important to be fully aware of what's going to happen before it happens. That way we can take advantage of it. Now, to try to determine, is this going to be bearish or is it going to be bullish? This is very, very easy. And I'm going to show you how we can kind of decipher this. And we have to do it by looking at the difference between the forecast and the previous. Because the previous report shows whatever the previous results were for maybe the previous month or week or quarter or year, but the forecast lets us know whether the stock market or investors or Wall Street are bearish or bullish by comparing the two. For example, the core retail sales for the month of December is forecast to be down negative 0.4%. The previous month, which would have been November, was down negative 0.2%. So if you see that the forecast being even lower, that lets us know be prepared for bearish characteristics. So we'll compare the PPI report. Same thing, where the previous report was up 0.3%, the forecast is expected to be down negative 0.1%. Same thing with the retail sales for the month of December, where November it was down negative 0.6%. We're expecting it to be negative 0.8%. So the whole thing, I mean, we're not talking about like mixed bearish and bullish signals here. We're talking straight bearish signals for Wednesday. And so, but Tuesday, you'll notice that there wasn't anything scheduled for Tuesday. Typically there is. This is a holiday week, so this week is going to be a little different. We could see a little low volume. I don't really think so, because it's not like a massive family holiday, but we could still see a small amount of volume and activity. Which we usually do during holiday weeks, but normally when we see things scheduled, it's usually a Tuesday, Wednesday, and a Thursday. Very rarely do we see anything scheduled for a Monday or a Friday, but we do see a Wednesday, Thursday, and a Friday. So that's good. But Tuesday, there wasn't anything on Tuesday, so Tuesday or Mondays are usually a day that can kind of absorb either weekend news activity or to kind of cool down any kind of volatility or activity that was on Friday. And so, but I'm not really aware of any major weekend news that can provide a lot of volatility going into Tuesday. But we still have more time. And so, but just know that if Tuesday is up, you'll notice as we're looking more into options activity that probably 60% is going to be on puts, 40% or is going to be on calls, because of the majority of like the major multi-millionaire, billionaire investors and traders, they know a lot of these secrets and stuff, and so that's why we have these meetings and stuff. That way we can talk about it and know what's going to happen before it happens. So Tuesday, I would say it could be bullish because the market needs to be up before it can come down. And but then again, Tuesday is also what's called a quantitative tightening day. Now, if you're not familiar with what quantitative tightening is or quantitative easing, I started to learn more about that during 2020 when the government shut down the economy during the second quarter. During the middle of when they crashed the stock market, all of a sudden the government was starting to buy stocks. They were buying billions of dollars worth of stocks. However, it was scheduled. They basically provide us a schedule of when they were going to buy stocks. What we would do is we would buy calls the day before, and all of a sudden the government pumped up the market. It was amazing. But they called that quantitative easing. Now they're selling the stocks that they bought, which is called quantitative tightening. They're doing it a little more trickier, but there is a schedule for that. I'm going to pull it up right. Oops, not that one there. Right here. So the quantitative tightening is now, they're in smaller amounts, but they are twice a week. For now, up until we go into about the summertime, then it's going to switch to once a week for a couple months, and then it'll be once a month up until about fall, about fall. But it's very aggressive. When the government is selling billions of dollars of stocks every week, it's every Tuesday, every Thursday. But when they sell these stocks, when I say that they're doing it tricky, they could sell it during pre-market, they can sell it during the market hours, or they can also do it 1 second before the after hours closes, which means that it makes it look like it was never executed that day, but it does have an effect the next trading day if they execute it during after hours. So that's why we got to be very vigilant on the quantitative tightening, and has it been executed? Because if it hasn't, then we know it's going to affect the market the next day. So we can go maybe a little bit more heavier on puts. And so, but this is a website. If you don't have this link, I can easily provide it to you in our chat room. But for now, just know that Tuesday and Wednesday are quantitative tightening days, or we can also consider that as dump days. These are days where the government is going to be dumping billions of dollars worth of stocks. For example, this Tuesday, the government is scheduled to sell $2.8 billion worth of stocks, where this Thursday they're scheduled to sell $12.4 billion worth of stocks. So Thursday, that quantitative tightening day should have a bigger impact than it would a 2.8. Because what we're starting to see, now that we're in a new year, we're in a new quarter, the quantitative the tightening is not as big as what it was, the last couple months. But we're starting to see how it's not having as much of a big impact on the stock market, especially if the government sells $2.8 billion worth of stocks. All of a sudden, we're starting to see other investors and traders put that money back in the market. So we'll see a big dip early in the day, but all of a sudden, people are putting the money back in, and all of a sudden, the market recovers. But 12.4 billion, that may be a little harder, or that 16 billion would be a little harder to try to recover the market versus 2.8. And so, but just know that this schedule here, it's very, very important as we're being aware of all these events. And so going into Thursday, January 19th, we have several different other reports, but 3 of them are scheduled to be released 1 hour before the market opens. And then we have another one here that's scheduled to be released an hour and a half after the market opens. Now, starting with the building permits for the month of December, the building permits is forecast to be a little higher than the previous. So that is obviously showing bullish characteristics. With Wednesday being down, very bearish. Thursday morning could be bullish. And so, but we do have the initial jobless claims, which is expected to be up a little bit higher than the previous. Previous was down quite a bit, but the government is also still trying to crash the the economy, or create the recession, which we're going to talk a little bit more here in a little bit. But sometimes if a report is showing bad news, sometimes that could be good news. So if investors want unemployment to go up, this could be actually provide the opposite characteristics, where it could provide bullish characteristics. But normally, in a normal world, with crude oil inventory levels and unemployment, we need these numbers down. The lower they are, the more bullish that it'll be. Unlike most other reports, we need the numbers up. The higher that they are, the more bullish that they are. But unemployment, oil, those need to be down, because unemployment, when it's down, it's just showing people are working, they're paying taxes, they're buying things. That helps the economy. Crude oil inventories, if that's down, that means people are driving, they're flying, they're on vacation, they're spending money. That helps the economy. And so, but it looks like we do have some, I would say, some bullish and bearish characteristics. But like I said, the unemployment, but again, the more rare the report is, the more of an impact it's going to have on the stock market. So the unemployment report, crude oil inventory levels, those are a weekly report, versus the building permit, that is a monthly report. So this is probably going to be more dominant than any of these other reports. And with the building permits, as that has to do with realty and everything else. But what we're seeing, even though with interest rates going up and whatnot, we're seeing a slowdown in automotive sales, as well as home sales, building sales and whatnot. But what we are seeing, as we are very aware of these economic reports, we're seeing new homes and buildings are maintaining themselves, because maybe it's just more cost effective to build a brand new house rather than buying an existing one that's overvalued, where you can buy all the materials to build your building or your home, and that's where I think we're starting to see an increase in that. And so again, I'm seeing mixed signals here for Thursday. I'm seeing both bullish and bearish. So to be determined, but we do have our Philadelphia Fed Manufacturing Index for the month of January, which is down -11. Where the previous was down -13.8, and so this is higher than the previous, and so that could also provide bullish characteristics. And so we have 2 versus the 1. Crude oil inventory levels, there's not a forecast on here yet, but that happens where they just haven't came up with a forecast yet. But this is an easy one for us to determine, because the crude oil inventory levels, especially ever since gas prices had surged beyond their normal range, what we're normally seeing is, most Americans get paid every 2 weeks, and what we're seeing is that the majority are filling up their tanks with their vehicles when they get paid, and they try to make it last for 2 weeks. And so we see 1 week where the oil levels are down, the next week the oil levels are up. And so in this case, so last week the report was up, so that is very, very bearish. They need to be down, remember. So most likely the forecast will be much, much lower than the previous, which will provide us bullish characteristics. So I'm seeing bullish, bearish, bullish, bullish. So the majority of Thursday's economic reports look bullish to us. So that's good news, now that we've been able to do our due diligence on that. And then going into Friday, January 20th, we have the existing home sales that we were just kind of talking about. Existing home sales is basically existing homes that have already been built, no matter how old they are. It can be 5 years old or 100 years old, or it doesn't matter. But however, it's the majority of the retail, the majority of the real estate sales, because normally when we're looking at new homes, usually it's about $500,000. So but before all these interest rates were outrageous. The existing home sales were right around 5 million, 6 million. I mean, we're down quite a bit, and every month it's getting lower and lower as these mortgage rates are just getting out of hand. The previous month reported at 4.09 million, and now it is forecast to be even lower, 3.95 million. And so Friday looks definitely very bearish, but by looking at the time, this economic report on Friday is scheduled to be released 30 minutes after the stock market opens. So hopefully, and it's very interesting how the government is involved with a lot of this stuff, because all these schedules are they're intentional to happen. With whatever happens in the day, it's all intentional. It's all meant to happen. So what if? Okay, now that we've talked about the quantitative tightening, it's scheduled for Tuesday, it's scheduled for Thursday. So by looking at Thursday, we see that a majority of it looks bullish. So what if the government saves the executing the quantitative tightening for the after hours? So that way we can pump up Thursday as high as we can. That way we can get it as low as we can on Friday. So we pump up the market Thursday, and then hopefully the government executes a quantitative tightening during after hours, which then affects the Friday morning pre-market. And so so all of a sudden, Friday, the market's down, and then all of a sudden it opens and it just continues to fall, and then 30 minutes after open, this report comes out, and then boom, it falls even more. And so. But that's a majority of where the day's activity is going to go, as right before power hours. So, and as we talk about some of our strategies and our guidelines, we always like to talk about our straddling is where we can really take advantage of straddling before these types of activity, because this is just going to provide a massive amount of volatility. So, but yeah, no, this is very good stuff. So we talked about the economic reports scheduled for this week, and you can always go into next week, but it's important that you look at this stuff on a daily basis, because the government always adds stuff to it. And so whether it be more reports or forecasts, but that's why it's important to look at it on a daily basis, just in case if there's any changes, as well as looking at the actual reports. As well as looking at the Joe Biden's or the president's schedule and the White House schedule. Now, these schedules are added about, every midnight on Eastern time, or 9 p.m. in the evening on the Pacific time. So if you're on the West Coast, that gives us an advantage to look at it at 9 p.m. While the majority of us are awake, versus on the East Coast, majority are going to be asleep around midnight. So that way we can kind of see what is scheduled to happen around power hour. So, and then so we talked about the quantitative tightening, economic reports, the stock options. But for that, let's talk about our rules and guidelines really quick on the straddling. Okay, right here. So I do remind you guys every once in a while in our chat rooms, but I just want to make sure that it is completely clear. If you guys are unsure about anything, be sure to unmute your mic and let me know, because the more you learn, the more you're going to earn. Rule number 1 is to always straddle heavy on the top 3 stock options. So sometimes people ask, where can I find the top 3 stock options? Well, we use a website called barchart.com as our radar. It says the most active options. So this allows us to see exactly what has provided, what amount of activity. Now we can look at this information while the market's open. That's why I call it, this is our radar, because it allows us to see what's going on, where the money's going, with what stock options. And this is all sorted out by options volume, which volume is always the current day's buying and selling activity. And with that activity, we can see the call and put ratio. And if you're new to options, again, a call is where investors bet a stock goes up. A put is when investors bet against the stock, betting it goes down. If that stock goes down, your account goes up. But again, we see a ratio where we can see that, Tesla options is almost at 4 million, which is very, very aggressive. But out of this amount of volume, we can see that the calls and the puts ratio is around 50-50. As investors are straddling Tesla throughout the weekend, they are not sure whether the next trading day on Tuesday is going to be bearish or bullish. They're not taking any chances, but they do believe that Tesla will continue to be volatile. And so as long as it's volatile going into the next trading morning, we can, even though we can buy our calls and puts 5, 10, 15 minutes before close, we can sell them the next trading day at different times. We don't always have to trade. We don't always have to sell them at the same time. We can. That helps, prevent any issues. But if you are more of an advanced trader, utilizing moving averages, we can sell our calls and puts at different times, maximizing our gains on one side while minimizing our losses on the other side. Sometimes we can turn that other loss into a gain. The market opens in the red and then eventually recovers into the green. That's where we can benefit on selling it at different times. And so and we just need a volatile stock to do that. Now, of the top 3 stock options is typically going to be our Tesla, Amazon, and Apple. Bed Bath & Beyond just happened to, miraculously show up on there because of, a lot of the news and issues that it's going through right now with, might possibly go through bankruptcy, getting bankruptcy protection, closing down stores. There's a lot of activity, with that, and so this is a fluke. And so, but when we're looking at this activity regularly, both Tesla, Amazon, Apple are the top 3. Usually we'll see if we're doing a 4 or 5, it's usually NVIDIA and AMD, which is right down here, or semiconductors. But Friday was pretty active with banks and Bed Bath & Beyond and whatnot. But the majority of the time, it's always going to be Tesla, Amazon, and Apple. So going back to our rules and guidelines, rule number 1: always straddle heavy on the top 3 stock options. There's our answers. Now, there will be a time, just like like an athlete, like a boxer or a wrestler. We always have that number 1 guy, but after a while, they need to retire, and then there's somebody else that's going to take its place. When I started, doing this day trading about over 5 years ago, AMD was like the number 1. It wasn't Apple. Apple was kind of down there a little bit, but AMD was always the number 1, and now Apple took its place. And then Tesla was always the second one, and then that was kind of always between that. And then when Amazon did their split, all of a sudden Amazon got in the top 3 now. So as we do this later on in the future, someone is always going to take the top 3's place. But for now, it's Apple, Amazon, and Tesla until further notice. So we have the rule number 1 down. Rule number 2 says strike price always at the share price, because a lot of times people ask, what strike price should I do? Well, rule number 1 says your strike price. Rule number 2 basically says our strike price should be the same at the share price. Now, what if the share price is right in between a couple of strike prices? Now, the difference between a straddle and a strangle is they both have the same concept, where you're betting it goes up and down at the same time. But the difference between a straddle and a strangle is that a straddle is the same strike price. A strangle is different strike prices. So if your share price is in between 2 strike prices, then you want to do a strangle. So your call would be the one that would be slightly above the share price, and your put would be slightly below your share price. And so, but again, it's the same But so we just defaulted to saying straddling, but just know that those differences between those two. And so so that'll always answer that question that you have: what strike price should I have? And then rule number 3, always the soonest expiration date for the most volatility. Because people ask, what expiration should I do? Should I do 2 weeks from now or a month from now? No, we want more volatility. The more volatility, the better, because we want to lose. We want to lose like 60% on one side, because we're going to gain 200 or 300% on the other side. If we're picking a much longer expiration date, like let's say a couple weeks from now or a month from now, not only is it going to be more valuable, you're going to spend more money on that, but the volatility is not going to be there. You're going to probably gain 5-10% on one side, but you're going to lose 5 or 10% on the other side. It doesn't make sense. The soonest expiration date will provide us more volatility as long as we're following these other rules. Because sometimes people ask, is there a time where straddling doesn't work? Yes, it can, because we're not following these guidelines. You ended up picking your strike prices way out of the money, where if your strike price is way far from the share price, you're going to suffer a lot of time depreciation, especially if you did not buy within the first or the last 15 minutes, or you're holding beyond the first hour, which we're going to get into. You're just going to suffer time depreciation. You did not follow these guidelines to help maximize your opportunity. And so rule number 4 says buy straddles 15 minutes before close to sell the next morning within the first hour. Sometimes people get anxious and they buy in the morning or in the middle of the day, but sometimes after that first hour the activity is gone, and then throughout the middle of the day when there's nothing scheduled to happen, the rest of us are just waiting for power hour. And so if you're trying to do your straddles in the middle of the day and the market isn't doing anything, you're going to suffer time depreciation. The middle of the day is what I call day trading territory. We have a couple little minor swings that go up and down. Those are good times to get in, get out, secure your profits, and then wait till power hour to dump pour a lot of money into our primary strategy. With the top 3, and you'll have favorites. You may Amazon may be your number 1, Apple would be your number 2, and then Tesla may be number 3, or maybe it would be the opposite. Maybe Tesla's your number 1. But for me, Amazon's my number 1 because I believe it has the least amount of time depreciation. Apple has been a little different lately, ever since Amazon has kind of butted in the top, the top guys there. But Amazon seems to hold its value the longest. Tesla does have some time depreciation, but it does have a lot of volatility, and so it just depends on you. But you can try it out, but as long as it's a top 3. But buying our straddles 15 minutes before close to sell the next morning within the first hour. Now, the reason why we buy our straddles 15 minutes before close is to minimize that time depreciation that we've been talking about. That way, when we get in our calls and puts, we're at a 0%. And what we're doing is we're waiting for to sell those the next morning. And it's kind of like day trading. It feels like that we bought and then we're selling. And hopefully we're utilizing our moving averages. That way it provides us our buying and selling signals. That way we know when to sell and when to continue to holding until further notice. And so, but sometimes if you're more of an advanced trader utilizing moving averages, we can buy now a little sooner than the 15 minutes, like within 1 hour before the stock market closes. So for example, if the market was kind of down during right before power hour, and all of a sudden we see that the moving averages is starting to uptrend, we can buy our calls maybe right then and there, and then all of a sudden the market starts to trend upwards during power hour. And then maybe 15 minutes before close, we see it starts to hesitate, it's starting to go down. Well, we can buy our puts right there, and now we're holding on to some profit going into the next trading day, rather than being a 0%, at that time. So that's where we can really, maximize our opportunities utilizing moving averages. But if you're not using moving averages, that's fine. But you probably want to buy at the same time, and you're going to want to sell at the same time. Don't be hopeful, if you're not using moving averages, because again, that helps us provide us those buying and selling signals. Now, rule number 5 is to avoid earnings and splits when it comes to stock options, because of the what's called an IV crush. It means implied volatility crush. So, for example, like let's say you decide to straddle earnings, and we anticipate some pretty big movements, but something had manipulated that earnings, and all of a sudden it doesn't move. It's at 0% or 0.25%. We call that a straddle killer or an IV crush. Or implied volatility crush. And what it does, it automatically devalues both sides, so you could potentially be down 20, 30, 40% on both your calls and puts. So this is something that could have been avoided. And so, but if we want to do earnings, then we got to consider that as a lottery play. A lottery play is just like if you were going to get a lottery ticket. Some of you guys, including myself, we got that Mega Millions. We're hoping to get that $1.3 billion. But we put some money onto it. We don't actually think we're going to win it. Yeah, we may dream that we might win it, what we would do if we had $1.3 billion. But it's just a fantasy. It's hopeful. It's wishful thinking. It's not actually going to happen. But we invest light. Some of us put $5 into it. $10, $100, whatever. Light. We don't go heavy on an earnings play or a lottery ticket. You're not going to put your mortgage payment on a lottery ticket. This is we go light. And if we win, we will win big. And so, but our primaries are going to be just like what rule number 1 says: always straddle heavy in the top 3. Those are the ones we straddle very, very heavy on. But anything else, we always do light, just in case if something doesn't work out. Now, we don't necessarily have to straddle earnings. If we're more certain it's going to go in one direction, we can pick that direction, but we always go light, because if in case something doesn't work out, it's money that we're not going to be worried about it if we lose it. But if we end up winning on it, we're going to win big. And so that's kind of what we're looking for, is those little extra cherry on top. Now, rule number 6: avoid straddling throughout the middle of the day to minimize time depreciation. So that's something we've already talked about. So as long as we can dial down these rules or guidelines, you will become very, very you will gain very consistently. And so, but it's when we start to fall out of these guidelines is when we start to mess up, and that's when we start you start taking steps backwards, and we don't want that. We always want to keep going forward. And so, those are our rules, our guidelines. They're very, very important. And so, since we're here, I did want to talk about the economic cycle. This is something we don't talk a whole lot about, but an economic cycle is extremely important to be aware of in case if you're not. Now, typically the stock market, or may have like a yearly cycle as well, where usually like 6 months the stocks go up, next 6 months stocks go down, then next 6 months stocks go up and go down. Well, the economic cycle is usually around 10 years, give or take 1 or 2 years. So it could be 8 years, could be 12 years, just depends on what's going on and who the president is. And so so an economic cycle, I'm going to show you this because a picture can say 1,000 words. So there's several of them. So I'm going to show you some that we're going to go over. Hopefully you guys can see this. If you can't, you'll need to kind of zoom into my little screen here so that we can see what I'm seeing here. Let's see if I can enlarge that. So, okay. So I got enlarged so that hopefully you can see it. So this economic report shows the GDP growth. And so this kind of helps let us know, are we in a recession or not, blah, blah, blah. Basically, we're right around here, where on the top here, in this cycle, which kind of shows us what to buy, what to sell. And so we had passed where it says sell financials, housing, retail stocks, automotive stocks, because, interest rates are going up. And financials, those are the banks. We're during the an earnings season now, especially when we've been talking a lot about the bank stocks lately. And so as interest rates are going up, banks aren't doing as much activity. And this is where it's saying sell your bank stocks, sell like your realty stocks, your retail stocks, and automotive stocks. Before they had plunged, and now it was saying buy metals, materials, like energy, gas, oil, gold, silver, things like that, and then boom! I mean, all those values just went up, and so so now we should be entering right around the top area here. Or soon we're going to want to sell paper and chemicals, but then you can see right here the tightening, the second or the third Fed tightening. That's the interest rate hikes. So as we're getting more into the interest rate hikes, but then it says Fed takes interest rates over 5%. So then we're going to be like in this area here, and then after a while, the government will begin easing interest rates, where that means interest rates will be going down, and that could happen later on this year, or if not this year, it'll most likely happen in at the beginning of 2024. So that's when we would be in this area here. So throughout this economic cycle, we can use this as a guide on what to do, because if you're not using it, I assure you, everyone else in Wall Street and all these billionaire and millionaire guys are using this. And if you're not, you're only leaving money on the table. So the next one, is very similar to it, though it will provide us some examples of stocks to buy or to sell. So again, we were on the top area here: sell paper, chemical stocks, and these are some examples as IP or the DOW or the DD. Then it says here buy medicine and supermarket stocks. As we're getting closer towards the more interest rate hikes, it's saying to buy PG, a K and D, a B, a K, and then so on. And then as we get more interest rate hikes, then it's saying it says sell smokestacks, stocks that aren't levered to and then so on. So it just helps give you an idea. And then right here, Fed stays neutral on interest rates. So that means that they're just going to keep it where it's at for a little while before they decide to lower interest rates. Look right here, it says sell gold. Not only gold, but probably the rest of the other metals and minerals and stuff. So that is when it's time to secure our gains, get out of that. And then it says right here, cycle starts again. And so then we have all these Fed easing and whatnot, and then we're here buy tech stocks. We're getting close to that, where we're almost on the bottom. And so, and every one of these just kind of helps provide us more insight on what's going on and what's going to happen here in the near future and the late future. So the next one that I have for you looks like this. This is looks a little different. Now there's two lines here. We can see one that has like a bubble circle and then one with a filled circle. Now the one with the filled circle, that's our economic cycle, and then the ones with the hollow circles is our stock market cycle. So we can see that it tells us what stocks to basically get into, but it doesn't tell us what to get out of. And that's where we kind of want to make sure we understand all these images. That way we understand what's happening here. And so, but there are some better ones that I have than this for you. But it does easily provide you, like number 9 right here, when to buy energy stocks is when basically tech stocks were up there. Energy stocks are down. But that's usually during the summertime, because right before the winter time, that gets really cold. That's the best time for energy stocks, oil stocks, things like that. So we want to get out of the technology stocks and mostly everything else during the summertime or the fall, when everything has really reached its peak. And then we get into oil, energy. That way we can just continually riding the wave up and not up and down. And so the next one looks like this. It says stock sectors rotation versus business cycle. So it's kind of the same thing that we're seeing in like the other one, where one is more or less the economy, or the other one is the stock market. So, but this at least it provides you another idea of what's going on. Or what to buy. It doesn't tell us what to sell. Now the purple again is the economy, the economic cycle. So we can see down here what stages that it's in, such as full recession, early recovery. For this part, full recovery on the top, and then early recession. Now, right now we're probably right in the beginning of recession area. And so that means that we're still going down, because as we listen to the news and whatnot, they're talking about possible and they do this all the time. Even last year they were talking about recession and whatnot. The news media just helps provide more either bullish characteristics or bearish characteristics, meaning where they can pour more fuel on the fire, making it more intensifying the situation. And so as they keep talking about recession, look at this. It keeps going down, but you'll notice all of a sudden the stock market's going up, and you're going to get confused because why are they talking about recession, or the recession hasn't fully taken effect, but why is the stock market recovering all of a sudden? Well, because look at this economic cycle. It's all part of the game. It's all part of the plan. So that's why I want you to be aware of this, because the recession is still going to intensify, but all of a sudden you're going to notice the stock market is recovering, because it's part of in the nature. But this is saying that we got to get into well, they don't have technology on here, but technology, well, yeah, right here. So it's saying that we got to start getting into transportation stocks. That's going to be like Ford Motor Company, Tesla. I mean, just you name it. If it's got wheels on it, we got to start buying it. And one of the interesting opportunities that we may have this year is Mullen, which is a new American electric vehicle company, which is right around 30, 40, 50 cents a stock. We got to we got to make sure we are, have this on our watch list, because they are building vehicles and they are delivering vehicles. They're not like a prototype company or anything. They are delivering physical vehicles to customers that are ordering them online. And so this could easily be a huge gainer for this year. And so, but it is about this time where for long-term and short-term investors to start repositioning into transportation stocks. The next one is going to be technology stocks, like Apple, Amazon, Tesla as well. Tesla's kind of in between the technology stock as well as an automotive stock, and anything else, Facebook and so on. And then services and stuff. And once we hit the bottom of our recession, which should be, as we've talked about, what's going on for this year, like the quantitative tightening. The quantitative tightening, that aggressive 2 weeks twice per week is going to end what I think right around May, and so that is when investors will begin to see the light at the end of the tunnel. And so this is where I'm thinking May is going to be. We're going to be right here in May, where quantitative tightening will then be once a week. It's not going to be as aggressive, and so it'll allow us to pump the market more, so that way it'll recover easier. Until they start doing quantitative once every 2 weeks and then once a month, then the market is going to skyrocket. And so, so this is, like I said, great information to look over. Let's go to the next one, and then boom, here's another good one. Now, one of these is going to click for you. It's going to make sense if it hasn't already. And then, so again, we are like right here, market bottom, full recession. And so we could be right around here. We could be at our market bottom. If not, then we're almost there. And so, but like I said, we still have that full recession. So when you're looking at the a lot of charts, our daily charts, it almost looks like we're getting ready to recover. And I'll show you something here really quick with the Webull. Here, I'm going to pull up Apple. We're going to pull up the daily chart. I'm just going to pull up a 3 months, or we can do 6, whatever. It don't matter. But we can see, hold on here. There we go. Okay, so this is the daily chart on Apple. So the buying signals and selling signals are when the moving averages crosses over each other. It lets us know whether a stock is trending up or down. So look at Apple. Apple's moving averages just crossed over about a week ago. It's letting us know that the stock is now trending upwards until further notice. And so a lot of stocks are doing this. Whether it be Amazon, Tesla, Apple, so on and so on, they're all starting to trend upwards now. So this could be where we've already hit the bottom, and now we're starting to slowly go up. But this is still showing that the whole recession talk is still going to continue. So that's where I think we're right. I think we're right at the market bottom. So we're just going to slowly, come up, and it's going to take a couple more months until we get to this point, right where this little crossover, part is, or maybe another month or so. I mean, who knows? But I believe this is where we are right here. And so, but it's basically, but it's weird because it says to buy financial stocks. I don't think we're quite there yet, but technology, I think we could be there. But to be determined. We just need a little bit more time to figure out, I would say for finance, wait until after all the financial earnings are done, and then we could easily get back into that. But with the interest rate hikes, that's another topic, because the interest rate hikes are scheduled to happen again during the first week of February. So we're like 2 more weeks for another interest rate hike, and there's been some talk whether it's going to be 0.5% or 0.25%. I figure either way, this still shows that the interest rates are starting to cool down, and I think this could be bullish either way, no matter which one that they pick. And so, but I would say after all the financial earnings are done, then we could maybe start, for long-term investors, can start looking into these finance stocks and bank stocks. But, just depends, but maybe give it more time. But it's just a really neat, way to kind of look to see what is scheduled to happen throughout our economic cycle. And again, this could be as long as, 10 years, from point A to, from one end to the other end. And so here's another way to look at the economic cycle. We're in the we're about in between stage 1 and stage 2. where it says, start buying, well, when the things were going down, it says to buy utilities, food producers, U.S. treasuries. Once we reach the bottom, then it's saying buy banks, technology, consumer discretion, and then more technology, transports, oil drillers, things like that. So it's just another way to look at this information. And so, yeah, like I said, it's just a great way to really dial down your these economic cycles. And so I did post these all over our chat rooms. That way you can save them to your device and your computer. You can print it out as long as you're looking at them, because otherwise, out of sight, out of mind. If you don't see them, you're not going to tune into them, and so you're just leaving money on the table, not understanding what's going to happen. And so I hate that, because when we were new, we believed that we had to rely on news applications, news companies to provide us news and alerts and information. But as you're more into those news articles and stuff, you start to notice that you're leaving money on the table, and that it's too late to react to it. Now, these news companies are basically doing exactly what we're doing. We're knowing what days certain events are going to happen, and we try to figure out what's going to happen before it happens. And so in a way, we're like our own journalists. We are so we know what's going to happen before it happens. So by the time the news alert comes out, we already knew it. We already knew how to react to it, before the news company even told us. So sometimes when, like, for example, these economic reports, we know most likely what the reports are going to be like because of the forecast. But all of a sudden, it gets released, and all these news apps start blasting it out. And sometimes it can take up to an hour for us to receive the alert, and by then the stock market has already reacted to it. And that's why we don't rely on news applications as a way for these alerts and guidance, because we already knew what was going to happen before we got the alert. So another thing that's important that we need to go over is the earnings reports. And so I always save a lot of stuff in our featured announcements area. When I created this group about 5 years ago, this was like my bookmarks area. It's kind of like on the cloud. Anything that I saw, news articles, anything, I just saved it in there for myself, but as well as for our members. And so that way we can always talk about it, we can look it over and whatnot. So I post this every Saturday, our earnings schedule for the next following week, but this is our top 10. So the top 10 for this week is the Morgan Stanley, Netflix, Goldman Sachs, Silvergate Capital, Citizens Financial, United Airlines, Charles Schwab, Signature Bank, Procter & Gamble, and the SLB. Which a lot of these are bank stocks, as we were just talking about it. But you can also click on the image to pull up the full, schedule if you would need to see other things other than the top 10. Now, the next following day or throughout that day, I'll also post the top 10's earning analysis within the featured area. Now, starting with the Morgan Stanley being the number one most anticipated financial earnings for this week, is scheduled to be released on Tuesday morning before the stock market opens. The company's earning release has a 34% expecting an earnings beat, which is absolutely terrible. Average should usually be around 65% for any earnings report. Anything after or anything above 65% is considered above average. Anything below 65% is considered to be below average. However, option traders are pricing in around 3 to maybe even 4% price movement in either direction, where normally Morgan Stanley moves maybe around 2% in either direction. So we are expecting more volatility with Morgan Stanley than normal. Now, Netflix has provided a lot of volatility in the last several years. However, the last financial earnings, I don't think it really did provide a lot of volatility. However, Netflix is confirmed to release their earnings on Thursday after the stock market closes. The company's earning release has a 50% expecting an earnings beat, so investors just don't know which direction this could go. It could go either way. However, option traders are pricing in around a 10% price movement on Netflix for this one, where normally in the past it's moved around 14 or 15. I think we've even seen it 20% price movement either direction. But with this kind of movement, this may be a straddle lottery play where, again, we do something light. But if it does go 10% in either direction, this could provide a good, decent a gain if it does. But if it doesn't, if it doesn't move or moves very, very little, straddling or even going in any of the calls or puts could be an implied volatility crush. So there's a high risk, high reward, where normally straddling, following our guidelines, is a low risk, high reward. So as long as we're following our guidelines, that's critical. That's our key. So, but again, it doesn't hurt to do a lottery play every once in a while, as long as it's a small amount. Goldman Sachs is confirmed to release their earnings report on Tuesday morning before the stock market opens. The company's earnings release has a 34% expecting an earnings beat, which is terrible. Option traders are pricing in around a 3% price movement, where normally it does that or a little less. Silvergate, this is the first time we've actually analyzed this. In fact, I've never even heard of it, but in fact, looking into it, they are a bank and they're digital. They specialize in digital currency and whatnot, but it's kind of maybe a revolutionary type of bank. Silvergate Capital Corporation, or SI, is confirmed to release their earnings on Tuesday morning before the stock market opens. The company's earning release has a 26% expecting an earnings beat. That is absolutely terrible. Now, what's the opposite of 26%? That is 74% expecting an earnings miss. 74%. That's not bad if we start thinking about, let's maybe throw a couple puts at this thing. But then again, this is Tuesday. We don't have an opportunity to buy before the earnings release. So this strategy may become invalid. Though option traders are pricing in around a 25% price movement in either direction. So, but this type of volatility could easily affect other similar stocks. So it's always good to know, but I feel that we're a little too late because the market's not open on Monday. If it was, it would give us opportunity to strategize on this one. But Citizens Bank or Citizens Financial Group, or CFG, is expected to release their earnings also on Tuesday morning before the stock market opens. The company's earning release has a 32% expecting an earnings beat. So as we see that these financial bank stocks, they're just going to get hammered. But again, as we're looking at the economic cycle, bad news is great news as long as we know how to utilize this information. Option traders are pricing in around a 5% price movement in either direction with this Citizens Bank stock. The next one is the United Airlines. This is going to be an interesting one. And United Airlines is also expected to release their earnings on Tuesday, but during after close on Tuesday. So this will give us opportunities to strategize with airline stocks. Now, if you wanted to avoid IV crush or implied volatility crush, you don't have to get into the particular stock, this particular stock, but maybe it's competitor stock like American Airlines that has already had its earnings. So if one has some kind of volatility, it will normally affect the others. And so if we got into American Airlines, it can help avoid implied volatility crush. And so, but looking into United Airlines, the company's earning release has a 72% expecting an earnings beat. That's great. And again, this is during the fourth quarter, during the holidays. We're talking Thanksgiving, Christmas, all that stuff before we started to see, the winter storm and all these cancellations, as well as the that weird glitch that happened the other day with the what was it, the airline dispatch system or something. Still nobody knows exactly what happened. A lot of us think that maybe the system got hacked or some kind of bug or glitch or virus or whatever that affected it, that prevented the airline industry from operating. And so, but again, that was during the first quarter. So as we get into the second quarter, as we start talking about airline stocks, those, they're probably not going to do as well. But but for this, we can see 72% expecting an earnings beat is above average. Now, option traders are pricing in around a 6, maybe even a 7% price movement in either direction, where normally it does move around 5%. So we are expecting some great volatility with the airline stocks Tuesday after the stock market closes. But we could see, these start to, people start to pump these stocks up right when the market opens. So to be determined, we definitely want to put those airline stocks on our watch list. Now, Charles Schwab is expected to release their earnings on Wednesday morning before the stock market opens, so we do have some opportunity to strategize with this. But the company's earnings release has a 50% expecting an earnings beat. Option traders are pricing in around a 4% price movement in either direction, and it normally moves around that, but we could be seeing a little extra volatility with this one. Now, Signature Bank is also expected to release their earnings on Tuesday morning before the stock market opens. The company's earnings release has a 47% expecting an earnings beat. Option traders are pricing in around a 12% price movement with this one, where normally it moves around 4%. So we are expecting 3 times the amount of volatility with Signature Bank. Now, P&G, or Procter & Gamble, which is interesting because, again, a picture can say 1,000 words. And a lot of times, by looking at the company name, you might not always realize what the company is until you actually see a little more visual information on it. The P&G are products that consumers buy on a daily basis. They're all over our house, each one of us, and we're always buying P&G products. And so they're expected to release their earnings on Thursday morning before the stock market opens. The company's earnings release has a 55% expecting an earnings beat. Option traders are pricing in around a 3% price movement in either direction, where normally it moves just slightly below that, but we should be experiencing some normal volatility with Procter & Gamble. Here's another bank. Gratuity, whatever, is the GNTE is confirmed to release their earnings on Tuesday morning before the stock market opens. The company's earnings release has a 27% expecting an earnings beat. Man, these banks are just going to get hammered on Tuesday morning, which could provide the market with bearish characteristics, first thing in the morning. So, because when they're all down, they could just drag the rest of the stock market with it. But hopefully not. To be determined. And so, but this is a great way to really do our weekend due diligence by monitoring the economic reports, the earnings reports, and diving into the economic cycle and all this other stuff. But let's take a closer look at the options activity one more time. This is from last Friday. So Tesla, again, had dominated the options activity, about 4 million overall, with 50-50 call put ratio. Again, investors, they just weren't sure what the next trading day is going to be like. Not taking any chances, but straddling a good 50-50 ratio. Same thing with Amazon, and Apple is basically the same thing, because they're just not exactly sure what Tuesday is going to be like. Now, when we're looking at our radar, which is what I call this, is sometimes we'll normally see our, like I said, our regulars. Stocks that are normally on here, stocks that are normally active, but every once in a while we'll see stock options that are not normally on here. And so there's a reason why it's not on here, because there's some kind of activity going on, whether it be news, earnings, manipulation, it could be all kinds of stuff, but we could see some pretty interesting, ratios or activity. I don't really see anything too. I mean, look at this. This is Carvana. Carvana has some legal issues going on. They're at $7 a share. They're down 12.5% last Friday, but for some reason we see out of this activity 68.6% are betting that Carvana is going to recover the next trading day. Now, Carvana is not normally on this list, but for some reason, because of whatever news or activity is going on, it made it become very active. And because of this activity, because it was so down, that people are getting ready for it to recover the next trading day. So we can find opportunities within our radar and not miss anything. Earlier today we did talk about GameStop and AMC and how that was manipulated. And I remember right before GameStop and AMC was manipulated, GameStop and AMC was still around $3 and $5 a share. All of a sudden we saw them on this list and started trickling up. People started betting on it before it reached the news, before it was manipulated. And right when it was manipulated, people started pumping it up, and we started seeing these very large, call percentage ratios. Like here's another one, Marathon Digital Holdings, or MARA, which is not normally on this list. And all of a sudden, boom, it's on this list. It ended Friday at $7.68, up 9. And we have almost 70% call ratio. 30% are betting against it. 70% are betting it's going to go up still. And so normally we see these ratios around 50-50, if not 60-40. But once we start seeing that 30-70%, 70-30, that's unusual. We don't normally see that, or especially anything above that. Sometimes we may see 80-20. That's very, very unusual. So we see two unusual things. We see that it's on this list. That's unusual because it's not normally on this list. We have a very unusual high percentage ratio. So something's going on here. So we can utilize this information to do some lottery plays. Again, remember our heavy ones are the top three. That's our regular top three. That's going to be our Tesla, Amazon, Apple. We always go heavy on them. I mean, thousands and thousands of dollars. It could be $10,000. I put tens. I mean, I buy like tens thousands of dollars on each one of these. That's how aggressive that I am. And I may do like $1,000 on Marathon, like $1,000, $5,000 on a call on that one, as well as maybe Carvana. But like I'll put $10, $20, $30,000 on Tesla, $10, $20, $30,000 on Amazon, $10, $20, $30,000 or $50,000 on Apple. And so. But yeah, this is great information. This is our radar. But we can also, on the side menu here, with the most active options, there's also option volume leaders. Now, if I click on that, that will provide us the most active individual calls and puts for either the current trading day or the last trading day, depending on when we're looking at this. Now, most of these I see that are expired, so they're no longer active. And we can see that because we can see either the date or the DTE, which stands for the days until that option expires. So 0 days, that means it's expired. It expired on the 13th, last Friday. So we got to go down to the one that's still current. So that makes AMC put the most active, the current individual calls and puts. And so, but we do have two expiration dates. We have one for February 17th, and then we have another one for March 17th. And I'm not sure, because we had an AMC guy here earlier today. He was a big AMC guy, and he was asking, he's been buying, he's holding, he feels that it's pretty low, and that he thinks it might be a great deal and should buy more. He remembers when AMC was around $15 a share, and I was like, oh, this is a manipulated stock. Anything manipulated, I highly recommend avoiding. Because they usually have a very high time depreciation. Plus, they're manipulated. Just don't be involved in this manipulation. Plus, I had showed him how we can try to forecast a particular stock, and I had mentioned we go to Google, type in CNN, the stock ticker name, and then the forecast, and then all of a sudden, boom, CNN can provide us with their analysts, their professional analysts. We see that their 5 analysts offering their 12-month price forecast. Out of those 5, combined had provided a $2 price forecast for AMC in 12 months. The highest was $4.50. The lowest is 50 cents. So, but that's their analysts. That's their judgment, their opinion, But again, with our other side of things, because we do like to get people's opinions, it gives us kind of an idea of what they're thinking. But that's just like an emotion. We don't want to rely on emotions for trading. We want statistics, analytics. We want proof. We want evidence. And so here it is. Always follow the money. These people are betting against AMC, betting that AMC is going to reach $3 either by the middle of February or during the middle of March. We can see that right here. Now, the open interest is basically the total number of open contracts that have been traded but not yet liquidated via offsetting trades, meaning that people bought this, but they have not sold it yet. They are continuing to buy more and to hold their positions. And we can see that the volume has exceeded the open interest, because if the volume was less than the open interest, then that could mean that they're selling. But if the volume is higher than the open interest, that means that they are buying more. That's going above and beyond. So one open interest is showing 24,000, the other open interest is only showing 14,000, and now we have 61,000 in volume. So going into Tuesday, what's going to happen is the volume and the open interest will merge together. It accumulates because volume resets itself every day, and so it goes back to zero. So we can see a fresh line of activity for that current day. But people are buying and holding, betting against AMC because they are almost certain that AMC is going to continue to go down. So, but this information just helps provide us great information of where people are betting their money. So that way we're not relying on words, opinions, thoughts, we're seeing where these thousands or millions of dollars are going to. So next one is Tesla. So Tesla, which is currently at $122 a share, we have a $130 call strike price. So going into this week, people look like they're bullish for Tesla. This expiration date expires this coming Friday, the 20th. We can see that the open interest is 33,000. The volume is just over 59,000. So this is telling us that this is going above and beyond what people are holding. They're buying more, they're holding because they're betting that Tesla is going to keep going up this week. And so here's another one. We have a $125 call strike price, which is almost in the money. But this one, we have a $120 call strike price, which is already in the money. And so we see 3 of these and then versus 1 put. So this is basically telling me out of all the active Tesla calls and puts, 75% of them are bullish going into next week for Tesla. But the highest strike price is $130, but that could easily change. If Tesla gets to $130 in the middle of the week,
we could see a $135, $140 call strike price that will formulate its activity as we get closer to Friday. So, we'll just have to keep a close watch on this. And then we have Amazon. Amazon has a $100 call strike price. It's currently at $98, but this expiration date expires this Friday as well. And then we have the Tesla put, $115 put, again, because a lot of people like to straddle Tesla. But it looks like with what information we're seeing now, people are more bullish with Tesla than bearish. Now, if you're more into, because not everybody's able to be actively trading throughout the day. Not everyone does this full time like I do, as well as many of you. But sometimes things are taking up your time. It could be family, it could be your full time job. Though hopefully and eventually, as you get more successful with this will be your new job. Because the stock market can provide you with an unlimited income, and I mean you can make $1,000 a day, you can make $10,000 a day, you can make $100,000 a day in gains from this. This is very easy to do, and especially while straddling. And so, but if you can't, and you're just dedicated to your 9-to-5 job, I mean, I get it. And you can't have a lot of time trading, and you have to hold positions longer than what you probably should. We can sort this page out by open interest because it defaults to volume. Let's change it to open interest by clicking on it. We'll click there, we'll hit refresh, and what that does, it refreshes the whole entire system by open interest, because now what we're seeing is what people are what are they buying and holding for a longer period of time. And so what we're seeing AMC, which we've been talking a little bit more about, but now we're seeing a $2 call strike, put strike price that expires in April, the middle of April 21st. That is 97 days from now, and it has a lot of open interest. 145,000 out of everything, out of all the stock options. This is the highest open interest. So AMC, it is not looking good for AMC. If you're holding AMC shares, you need to get out of it now. Don't be optimistic, because investors are betting against it very heavily, and it's not looking good. And they could easily, with all these like hedge fund companies like Citadel and whatnot, we know that these guys will help make a bearish stock more bearish. So the next one is ATVI. What is that? Is that the Activision? Let's double. Yeah, Activision. So Activision, which is, we play a lot of phenomenal games. They make games for the Xbox, PlayStation, the PC. I think they also make a lot of the Call of Duty games. And so, but for some reason, we have a $75 put, but it expires in a year from now, so which is kind of weird. It has a very high open interest, not a lot of volume last Friday. So maybe maybe this was a thing, and they're starting to sell it. But yeah, there's just not a whole lot of volume. But the more that they sell, though, the lower that the open interest is going to get. So we'll have to kind of see exactly what's going on, because maybe it already reached its target price, and now we could see, whereas if the open interest begins to decrease, we should start to see Activision slowly go down the list. But we'll start to see other things go up the list, like AMC did. Now, this is the Teva. Teva is a pharmaceutical company. They've always been around this price, but we're starting to see a $9 put strike price. People are starting to bet against Teva, and they're expected to have it reach $9 by June, or 153 days from now. It does have a lot of volume, a lot of open interest. Now, but if you're not into stock options, that's fine. I get it. But you can still utilize this information to see where people are betting stocks are going to go up. So in your case, if you want to buy shares, look for calls. Look for calls that are especially substantially above its current share price. So we'll try to find something, for example, here. Okay, here's a Tiva, a Tiva call, $15. That's kind of mixed. So we have a put and a call, but let's keep going down. I don't really see anything like substantially, but only because we're at this period of time where where the recession is still kind of coming down. The market looks like it's trying to recover up, so we're kind of in this weird little transition. But it's still wise to look to see, because, like, for example, here's one. Ford Motor Company is currently at $12.72. We have a $20 call strike price. Out of everything here, this is probably the best one to use as an example, because if you bought shares, let's say if you bought shares of Ford Motor Company and you're under $13 a share and it reaches $20, how much was your gain on shares? That's like what, 70%? You just gained 70% from holding a share. Now, not only are you probably holding on to something that's appreciating, but it could be a stock that's paying dividends. So not only are you holding something that's appreciating, but they're going to pay you every 3 months for holding their stock that you can use for cash, or you can use to reinvest into more shares. So that's why you don't have to use it for stock options, strategies. But it's also a great way to find stocks to invest into shares or dividend shares. So it's, like I said, it's a great strategy, great bit of information, and all this information is free. None of this stuff costs you anything. And so, but yeah, great information, and but you can also look at other things too, throughout this options area on the bar chart website, like the strangling. We can also look at that kind of activity. When we're looking at the straddling area, we want to look at things that are multiple of. If we see one, that's it's not enough. For example, we see a lot of the Bed Bath & Beyond. There's 1, 2, 3, 4, and again, these would be lottery plays. And this is not part of our guidelines or rules to invest heavy in. Anything else other than the top 3, again, is considered a lottery play. So these are just ways to find other things to invest a little bit of money into, but not a lot. But Bed Bath & Beyond would be maybe a good lottery play. Any other multiple ones on here? No, I'm not really seeing any. There's a Mullen. We did talk about the Mullen a little bit, but that's just one. But we can see that the Mullen is at 35 cents a share. And so, they're building electric vehicles. It's not like a prototype or a pipe dream company like Nikola or Workhorse. But we can also click on all 4 of them. So we see that Bed Bath & Beyond dominated the first page. We'll go to the second page, take a look at what else is going on here. Find multiple of the same stock. There's a couple Apples. There's 3 Apples, 4. There's a couple Teslas. So Apple, Tesla, looks like it's kind of dominating the second page. We'll go to the third page. I see a couple AMDs, a lot of Teslas, just the 2 AMDs, but Tesla has dominated the list. There's 4 Apples. You just start from the top of the list, go and work your way down and count them. We'll go to the 4th page, and then start from the top, work our way down. There was 2 Costco's. There's one on the bottom, one on the top. Let's see, 2 Starbucks. But I like to see 3, 4, 5, 6. More the better. I just don't see a lot of the same couple Teslas, Amazons. Yeah, just regular stuff. But like I said, this is great information to kind of go over. Anybody have any questions? Anything anybody wants to bring anything to the table? Are you guys ready to rock and roll for this week? Feel free to unmute your mic. You can easily, if you want to screen share, voice chat, whatever. Everything makes sense. All right, I think we're good. No questions. That's good. That means everybody understands. Sean, do you have a question?
Well, yeah. My only question was, I was in the options one room and I got kicked out for some reason. I'm just wondering why.
This is the chat rooms. Everything are still in a beta stage. They are glitchy. Occasionally we do experience glitches like that. So I'm not sure if I have to look more into it and see if it's that, or sometimes if people post something that's not related to the stock market, because sometimes people want to share like referral codes or maybe TikTok videos that are unrelated. That could cause someone to get removed from the group, not the group, but the chat room. But you can easily enter back in. Sometimes rooms could get full, and it's hard to join.
That's the thing, is option one is now full. So. Okay.
Yeah, but people do leave occasionally, because, especially during a bear market. People get frustrated. They tend to give up, and they end up leaving. There will be some openings, and I do request Facebook to try to increase the limit. They have done it a couple times. They seem to be kind of wanting to stay around 1,000 people per room. I would like it to be increased, but I'm just waiting for their final approval. Most other groups, if they have this, it's usually a couple hundred or up to 500. But we do a pretty good job, maintaining good professionalism, where other miscellaneous groups can get pretty chaotic and out of control.
It's been an awesome group.
Yeah, definitely. And in the past, I've always had other people say, "Oh, you should be charging for this. This is a money maker." I don't believe in charging anyone for it, because the stock market provides me and all of us thousands of dollars. Why charge someone pocket change for something? It doesn't make sense. And when we charge someone for something, all we're going to attract is people with no experience. I don't want that. I want people with a variety of experience. There's people in here that have been trading for 5 years, 10 years, 20 years, 30 years, 40 years, and we can all bring our experience to the table, our knowledge, and that's where a lot of my experience has came from. A lot of these professional traders like straddling. I would have never imagined straddling being. I would have never thought about it. I would have never thought it existed. I would have never thought it would have worked.
It's a game changer.
It is a game changer. It's a gold mine, and psychologically, we would have never imagined betting a stock goes up and down at the same time. And so, with these professional traders getting involved in our chat rooms, in our group, being able to provide what makes them successful. And again, these are millionaires. These people that said, "Oh, they started out with $500 or a couple $1,000, and now they have millions of dollars." I was like, if they can do it, I can do it. Or if they can do it, we all can do it. We just need to be able to synchronize this information. That way, we can help each other out. And that's what works, and that's kind of what my philosophy is with this group, and it's made us become very, very successful. We are the most popular, most successful, with most members stock market group on Facebook, and so it's just something that we need just to continue doing, and to help and provide the next new investor this information and knowledge. That way they can continuing passing that forward. But once you get successful, we can now help not only ourselves but our friends and family and other people around us.
Yep, that's what I'm getting ready to do.
Because karma's always there, and karma's always watching. If you can help other people, karma's going to help you with the stock market. And that's another critical thing to kind of implement.
Yeah. I have one question. What are we thinking the crypto market's going to do in the next?
Oh, I'm glad you mentioned that. So crypto. Let me see if I have. So cryptocurrency. Let's talk about that. As we talked about, our economic cycle is every about every 10 years or so. The cryptocurrency has a 4-year cycle. And so the 4-year cycle looks like this. And the reason why it has a 4-year cycle is because of what's called Bitcoin halving. Are you familiar with what Bitcoin halving is?
I'm kind of getting familiar with it, but I'm not real familiar.
Okay, I'm going to explain it in very simple terms. So when the creator created Bitcoin, so he wanted to ensure that it was always going to appreciate no matter what. But how do you get something digital, like a digital currency, to appreciate that doesn't exist? Because Bitcoin, believe it or not, was actually under $1. I think even Bitcoin reached a penny. Can you imagine Bitcoin at a penny? But how he made it so that it was always going to appreciate no matter what is he created something called Bitcoin halving. Now, Bitcoin halving takes place every 4 years. What happens is they subtract Bitcoin out of the system, about half, but they leave the dollar amount there. So what happens if you were to subtract Bitcoin out of half the amount of Bitcoin out of the system, but you leave the dollar amount there, that dollar amount doubles. So other investors and traders want to take advantage of this opportunity, and they dump more money into it. So not only does it double, but it quadruples. So what we see with this 4-year cycle, hopefully you can see my screen here, but we can see that when the Bitcoin halving event takes place on the one side, it doesn't have a massive, it doesn't react like instantly, but it does within 6 months or 12 months. But we can see that after the Bitcoin halving event takes place, it trickles up. Now you can see the lines on this image here. All the fainted lines is 1 year. So we can see that we're 6 months or half a year is on this side. We see another 6 months on this side because the Bitcoin halving event usually takes place in the middle of the year. But total, we have 4 years altogether here. So right now, we're right in the middle of a Bitcoin halving event because the last Bitcoin halving event took place in May of 2020. So we're right in the middle, which would put us right here. So last year of 2022, the whole year was the bear market for cryptocurrency. So now we've reached the bottom of the current, with what position that we're in. We are now in the accumulation phase for the next 6 months. And we can see the 6 months because we're right in the middle of this of these two lines here. Then after that, it's the expansion, which really, it's just kind of readjusting. But after 6 months, or let's say the summertime, cryptocurrency is going to just range flat for the next 12 months after that, until the next Bitcoin halving event that takes place in the middle of 2024. Then it's going to do this. So, but what we see though is that the previous highs become the new lows, because the previous Bitcoin halving event, the highs was around what was it, $16,000, $17,000, $18,000. The lows was $3,000. So if the previous highs was around that $16,000, $17,000, $18,000, that's what the new lows was right here. It was just right around that $16,000, $17,000, $18,000 area. So that's where we can help determine what the bottom is, price-wise, because it's always, the previous highs become the new lows. And so after that, so if the previous highs was Bitcoin was right around 60,000. And so so we quadruple that. So
160.
No, quadruple. Four times 60,000 is $240,000.
Damn.
That is what Bitcoin is kind of doing, this mathematical, equation. That is kind of what we can hypothetically forecast Bitcoin to reach. Now, with the new lows, which will be the previous highs, the new lows will be $60,000. Okay.
Yep.
So what we see then, look at this. Hopefully you can see this. this is amazing. I love it because it's so true. Because in 2011, everyone was, oh, this Bitcoin's dying. It's at a penny. We got to get rid of it. And in 2015, after the next Bitcoin halving event, Bitcoin went down. It plunged to $200, and they were like, "Oh, it's dying. We should sell it. Should I hold? Should I buy more? Should I?" They just didn't know. And then in 2020, when it plunged down to $3,000, $4,000, and they thought the same thing. Well, now we were just experiencing the same exact thing for 2022. When it reached under $20,000, it reached 16, 17. Oh, there's dying. And people kept saying it's going to get to 15,000 or 10,000. I'm like, no, it's not. It's not even going to even get there. It's done. It's reached its bottom. When we know this algorithm and everything, we know what it's doing and where it's going to go. And then 2025, look at this. As we're just talking about how Bitcoin is going to reach $240,000. People are, once it gets down, to 100,000 or 60,000, people are gonna be like, "Oh no, it's dying. Should I sell? My cost is $200,000." It's so. So then I was like, okay. So as we look into more of this Bitcoin halving events, they do have a certain number of until it stops. But we are like over 100 years until there's no more Bitcoin halvings. But with this, information, we know that it's inevitable that Bitcoin will reach over $1 million. And probably, if we figure out, this mathematical equation, Bitcoin could reach $1 million in 10, 15 years.
Wow.
It's not a matter of if, but it's when. It is inevitable that it's going to happen.
So my next question is, I'm just heavily invested into it, is like Shiba and Dogecoin. I mean, what is something, I know you can't tell me, but what is the prediction you think that? Well,
yeah, and it's always hard to predict, especially with other miscellaneous things and whatnot. But they all follow Bitcoin. So as long as Bitcoin is doing what it needs to do, Shiba, Dogecoin, all those other things, Ethereum, Litecoin, whatever, they're all going to follow Dogecoin. They're all going to follow Bitcoin, and we're all going to see some new record-breaking highs that nobody's ever seen before.
Yeah.
And the neat thing with learning a little bit more about this, if you Google like crypto market cap, there's a crypto market cap website, and it's neat because they have these in order by the highest market cap, highest market capital cryptocurrency. So we can see who are the big dogs, who are the big players. So Bitcoin, Ethereum, they're always number 2, and then we have Tether, so on, blah blah blah. XRP, blah blah blah. Dogecoin, number 9. They're and I always recommend because sometimes people ask I don't know who's doing that there. But yeah, some people will try to ask questions on cryptocurrencies that are maybe on 50th place, 200th place, whatever. I recommend focus on cryptocurrencies that's within the top 20. And so again, Dogecoin's number 9, so that falls within that those guidelines. Litecoin, we got there. Shiba is number 16. And so when Dogecoin, I don't know if you were investing in Dogecoin when Elon Musk got on Saturday Night Live. I told everybody, everyone needs to sell Dogecoin before he gets on Saturday Night Live. This is one of those things, buy on rumors, sell on news. When he gets on Saturday Night Live, that's like on news. And everyone's, oh no, it's going to go to $1. I'm like, no, it's not. It is not going to get to $1. This is all planned for volatility. Just listen to me. This is exactly going to happen the way that I'm saying it, and it did. And everyone's like, oh, okay, because once Elon Musk got on Saturday Night Live, he started to talk, because everyone's like, he's going to mention Dogecoin, he's going to mention to the moon, and blah blah blah. And once he started talking, it started to plunge. But Dogecoin surged before he got on Saturday Night Live. People were just hoping or wishing that Dogecoin reached 1 penny. Because this used to be like a Shiba stock. They were always a fraction of a penny. But it got to a penny, then it got to 2, 4, 8, 10, 20, 40, 60, and then he got on Saturday Night Live. He started talking, and then it just started to plunge down to 55 cents, 50 cents, 40 cents, and so on.
I remember.
But it was just a big manipulating thing. But normally when something happens to like this, whether it be GameStop, AMC, or Dogecoin, there's always a copycat. With what happened with Dogecoin, we had thousands of other copycats. We had SafeMoon, Shiba, so on and so on. But only one or a few will slip through the cracks and may become successful. And out of all of those, the Shiba was the successful one. Shiba is going to be the next Dogecoin. I believe during the next Bitcoin halving event. So we could see maybe Elon Musk or maybe somebody else could do the same type of manipulation, or it could be something else. But we have to stay focused and to watch for that. But I believe people are going to want to try to pump Shiba to a penny. And that's going to be thousands of a percent of a gain if it did that. And so, but it to be determined. But it's going to happen, one way or the other. But then trickling down, with the rest of the top 20, those seem to be, the primaries. I usually recommend Bitcoin, Ethereum, Dogecoin.
What about XRP?
XRPs. That's a good one. I forget the nickname for that. But yeah, so that's another good one. Litecoin, Shiba.
I've heard a lot of good things about Litecoin.
Yeah, Litecoin's a good one. They're huge market cap. You can see that they have a $6.3 billion market cap for cryptocurrency. So that is very good. Anything else, I just kind of look at that as just kind of, minor, things we don't really see or hear much of. The top 20 is basically, I think, the majority. Where a lot of the money is being poured into, because then we're starting to see that $3 billion market cap and below, where Shiba has a $6 billion market cap, and then we work our way up. So this is where, as we follow the money, this is where the money is being poured into.
Gotcha. Thank you.
Hopefully that makes sense. Anyone else have any questions, or do you have any more questions?
Nope, I'm good. Ready for a great week.
Awesome. All right. Anybody else have any questions? You may have to unmute your mic if you need to talk. Otherwise, I'm going to assume everything makes sense and you guys are ready to rock and roll. All right, guys. Thank you so much. It's been awesome. Have a great week. Make good choices. Stay focused. Follow our rules and guidelines. And if you guys ever have any questions, please don't hesitate to let me know. Thank you. Take care.